Hey, what is up everyone? Today we're talking about how to invest $10,000 right now. So whether this is your first $10,000 that you're looking to invest, or if you have been investing for a little while and you have an additional $10,000 you want to invest, we're going to go over some of the best places to put your money right now to make sure you get the most amount of return and mitigate risk. Investments are absolutely crazy right now. And if you have any money in the markets, you've probably lost a substantial amount of money year to date. Companies like Facebook are down 53% year to date. Tesla is down 41% year to date. And even Apple is down 24% year to date. And if you've been investing in Peloton, you're down 90% in the last year. According to the Fear and Greed Index, which measures the overall sentiment of the stock market, we're sitting at about 23 or extreme fear. So what I want to do is go over what are 7 different investments or ways that you could be investing that $10,000 so that you can get the most amount of return in this crazy economy. And the way I'm going to share this is I'm going to break it up into 3 categories. The first category is going to be our safe plays, and this is going to be your guaranteed way of not losing money and hopefully getting some upside. Our next category is going to be moderate plays, and this is going to be really good for those of you who are willing to put a little bit more risk in, wanting a little bit additional upside. And the third category is going to be the aggressive play, and this is going to be for those of you who are okay with stomaching that volatility and want to have the maximum amount of upside over the next few years. The first investment on our list is a safe play, and it is to pay off your debts. When we think of investing, we tend to think of investing in the stock market, real estate, bonds, and things like that. However, when you're in an environment that is very, very volatile and very scary, sometimes the best play to do is to pay off debts, especially if you have high interest debts. Now, the most common question I get asked is, when do you pay off debts versus invest? As a general rule of thumb, it depends on what gives the highest return. So if the interest rate of your debt is higher than the interest rate that you're thinking about getting from an investment, then you're going to absolutely want to pay off those debts. Now, according to LendingTree, the average new credit card APR is around 20%. So let's say that you have $10,000 as well as $10,000 in credit card debt at that 20% rate. Well, unless if you know that your investment is guaranteed to make way above the 20%, you will actually be better off paying your debts. And that is because when you pay off your debts, that is a guaranteed rate of return. However, let's say that you have some debt that is sitting at 2% interest rate, and you know that you can get at least an 8+% return on an investment. Well, in this case, it's absolutely better to do the investment. The next investment on our list is another safe play, and it is high yield savings accounts. If you don't have any high interest debts to pay off, then one of the best places to park your money is in a high interest savings account. One of the keys to building a lot of wealth over time is to avoid the downward market cycles. And that is because if your stock that you invested in dropped by 30%, it's going to have to grow by 42% just to get back to where you were. And if that stock is growing at an average of a 10% return per year, that means that it could take you 3 to 4 years before you get back to where you started. Now, there are all kinds of high interest savings accounts out there that can earn upwards of 9% per year, and I talk about them on my channel all the time. I'll leave some links below in the description box. However, let's highlight a few really good ones. Some high yield savings accounts to check out are Blue Federal Credit Union and NetSpend. We have Digital Federal Credit Union and Outlet Finance. And we also have HM Bradley and Varo Bank and many others. And like I said, these can earn upwards of 9% per year, so be sure to check out some of my videos on high yield savings accounts. The next investment on our list is also a safe play, and that is to invest in I bonds. Now, as of recent, the federal government and the Bureau of Labor Statistics stated that inflation is at 8.6%, which is at a 40-year all-time high. If your money is not growing by at least 8.6%, you are actually losing money. Let's say right now you have your $10,000 sitting in an average bank account earning 0.01%. Well, at an 8.6 inflation rate, in 1 year, that $10,000 is going to be worth just over $9,100. So an I bond is an amazing way of overcoming this issue. Now, for those of you who don't know what a bond is simply just a tool that companies or governments can use to raise some capital. And in return, they offer a specified rate of return. Now, an I bond is issued by the US Treasury, and it's designed to help keep up with inflation so that you don't lose the value of your dollar. And it's comprised of a fixed rate as well as a variable rate to match inflation. Now, as of this recording, the US Treasury is offering a 9.62% through October of 2022. Now, there are a few things to keep in mind with I bonds, though. There is a minimum electronic purchase of $25 with a maximum investment of $10,000 per calendar year. You do have to hold on to your bond for a minimum of 1 year before you can cash out. And if you cash out before 5 years, you lose the previous 3 months of interest payments, meaning that had you had the bond for 18 months, you'd only be paid out for 15 months of interest. And lastly, you do have to pay federal taxes on the interest earned. And you can buy I-bonds through the Treasury website, which I'll leave a link down below. The next investment on our list is going to be a moderate investment play, and that is index funds or ETFs. This is going to be an amazing investment for those who want to have a chance at beating inflation. Now, I talk on my channel all the time about index funds and ETFs and why I believe that they are probably one of the overall best investments any investor could make. And that is because 92 to 96% of the time, they beat out stock pickers and hedge fund managers over a 15+ year period. To give you an idea of what that means, if you're playing the game blackjack, you have just over a 4% chance of actually getting blackjack. If you're looking to do index funds or ETFs, I would suggest getting started with these two. First is VOO, V-O-O. This is an amazing index fund that tracks the S&P 500, which is the 500 largest companies. It has a 10-year average return of just over 13%. Had you invested $10,000 10 years ago, you'd be sitting on just around $36,000 today. The other ETF on our list is VTI, and this seeks to track the CRSP Total Market Index, which essentially means that you're investing in literally everything, small cap, mid cap, and large cap companies in the US stock market. Now, this is one of the highest earning ETFs out there with a 10-year average return of 13.25%. And those previous 10-year returns have been in a historically long bull market. When we look at a general index fund like the S&P 500, since 1957, it has had an average annual return of around 10.5%, which is about 7% when adjusted for inflation. So while we may see some more downward cycles in the index funds or ETFs, we do know long-term they always tend to go up. The next investment is another moderate play, and it is real estate. Now, real estate is one of my overall favorite investments out there, and I do believe it's one of the best ways of building some huge wealth over time. And that is because of leverage. Let's say that you're sitting on $10,000 right now, and you decide to do an FHA loan of 3.5% down. Well, if I take $10,000 and divide by 0.035, that means I get access to a $285,000 home. Now, according to this study, from 1929 to 2021, the average annual return is around 4.2% for real estate. So if my $285,000 home grows at 4.2% for the next 30 years, that is going to leave me with a $1 million home that is completely paid off. To take it another step further, you can move out of it after a couple years, get some tenants in it, and not only are you building wealth, but you're also getting cash flow each month. Now, one of the biggest downsides investing in real estate is getting approved for a loan, which can be very, very challenging. The other issue is that your money is not very liquid. So if you think you're going to need your money in the near future, I wouldn't suggest investing in real estate. This is where you want to invest in REITs, which stand for real estate investment trusts. And REITs are basically like investing in the stock market with real estate. Your money is completely liquid and you don't have to worry about getting qualified for any loans, but you still get to take advantage of the real estate market. The next investment on our list is an aggressive play, and that is cryptocurrency. Now, I'm not going to go into a lot of detail about cryptocurrency, what it is and the future of it, but if you are looking for something that could have some really high upside potential, this is going to be it. Just as a quick overview, I would suggest sticking to the two major coins, Bitcoin and Ethereum. And if you want the safest play, stick with Bitcoin. But when it comes to cryptocurrency, the longer that you are in the market, the less risky that it becomes. And the shorter the time frame of your investment, the more risky it becomes. If you invested $10,000 1 year ago, you would be down 36%. Had you invested 3 years ago, you'd be up almost 69%. If you had invested 5 years ago, you'd be up 687% to date. And had you invested January 1st of 2012 when Bitcoin was just $5.27, you would have returned 388,000%. Or in other words, 100 to 200% compounded annually. My suggestion with cryptocurrency, if you're going to invest, don't invest more than you're willing to lose. And if you are going to invest, be sure that you're going to be holding at least a minimum of 4 years or longer. And that is because anyone who has ever invested in Bitcoin has never lost money if they held for at least 4 years or longer. The last investment on our list is to invest in yourself. Listen, investing in stocks, real estate, and crypto are absolutely fantastic, and it's a great way of building wealth over time. However, in times like this, I do think it's really great to double down on yourself. I talk all the time on my channel about developing high-paying skill sets and also creating side hustles or side businesses. And that is because just a little bit of money and a little bit of time could yield you 2x to 5x plus income increases. And this is going to begin to pay you out indefinitely. You see, a long while back, I was barely making $30,000 to $50,000 a year. year. When I decided to invest in myself and learn skill sets in the fitness and nutrition industry as well as life coaching, I was able to quickly move over the six-figure mark, which then meant investing in things like real estate, stocks, cryptos, and things like that. So it doesn't necessarily mean that you have to start your own business or start a side hustle. You could just look at getting certifications in the thing that you're doing already. And in fact, I have a client who's a mechanic. In just the last 3 years alone, he's gone from $50,000 a year to $150,000. And that is simply due to him investing in more certifications and learning new skill sets in his industry. But those are 7 ways to invest $10,000 right now. If this video gave you some value, please be sure to smash that like button, hit the subscribe button, and also be sure to ding that little notification bell so you can get more videos on personal finance, investing, building wealth, and creating life on your terms. Let's get out there and let's build that dream.